From a peak of $610 back in November 29, 2024, down 57% all the way to $261. UnitedHealth Group, $237 billion valuation. What just happened to this thing? Just look at that drop. It is currently now selling at the same price it was selling at around 2018, 2019 levels. This thing is getting crushed. Year to date, it's down 48%. A series of negative events. Everything from a surprise earnings miss to a CEO resignation. In my head, it's already undervalued just by looking at this chart. But let's check out some of the numbers. What happened? What's causing this drop? So UnitedHealth Group is the nation's largest Medicare Advantage insurer. So right off the bat, one of the main reasons why this thing started to fall was the skyrocketing medical costs and the margin pressure that they are experiencing because of these skyrocketing medical costs. Starting around the second quarter of 2025, super recent, the second quarter consolidated medical care ratio spiked to 89.4%, increased 430 basis points year over year. What does this mean? So pretty much for every dollar of premium, nearly 90 cents were going to pay medical claims. The higher the medical care ratio is for these insurance companies, the less profit they make. Nearly 90 cents of every dollar paid was going into medical claims. Let's see some numbers. In 2022, their medical care ratio was 82%. So huge jump, 89.4%. So with all the margin compression they're experiencing, it pretty much shows the rising healthcare expenses due to higher service utilization, costly new therapies, and general medical inflation. This has all severely undercut profitability for UnitedHealth Group. Let's check out their site. So post-COVID, UnitedHealth was pretty much caught off guard by the post-pandemic rebound in healthcare usage. This all resulted in higher payouts that dented their earnings, hurt their margins, increased their medical cost ratio, of course. After all that, it caused them to miss some earnings and also slash guidance for the forward year. So the first quarter of 2025 was one of the first quarters in a long time for UnitedHealth Group. As you can see right here on the bottom right, they missed earnings per share and missed the revenue estimates, both earnings per share and revenue estimates. First quarter 2025, you could already start to see that they were slowing down. And again, in the second quarter, that's where they got hit with the higher medical cost ratio. This was the first quarterly earnings miss for UnitedHealth Group since 2008. That was a big record to lose. So what happened after that? Well, the CEO got in trouble and a bunch of management changes happened, causing the stock to drop even more. So around this time right here, May of 2025, at the height of all this drama, we got the revenue miss, we got the earnings per share miss, we get the higher medical cost ratios. The CEO, Andrew Whitty, stepped down. UnitedHealth Group abruptly replaced the CEO, Andrew Whitty, deepening a terrible year. They kicked him out. They stepped him down. Who knows? Says it was for personal reasons why he stepped down, and they moved to bring the former longtime CEO Stephen Hemsley. So the board rehired Stephen Hemsley. He is now the interim chief CEO of UnitedHealth Group. He was on the chair and the board. So a lot of upper management drama. And of course, guys, there was that thing that happened in 2024. Brian Thompson, he was the CEO of the insurance division, was killed. He was killed. And the death of the CEO of the insurance and the death of Brian Thompson pretty much rattled more of the investors, of course. Then next up, we also have the CFO, John Rex, planning to step down in September, causing the stock price to crash even more. Just a perfect storm happening for UnitedHealth Group. Huge shakeup. And after all that, there's now currently some investigations in UnitedHealth Group. So they're just getting attacked, guys. Again, just looking at this chart, this does seem all emotional. It's a screaming buy to me. I'll pull up some of the numbers real quick, but it's a perfect storm behind this 60% plunge. Just looking at some of the quarterly data real quick. Total revenue has still been improving year over year. The latest, they're still posting 111 billion. So second quarter, guys, remember, UnitedHealthcare's second quarter 2025 grew to 111 billion, almost 13% year over year. Huge growth in total revenue. They missed their earnings per share, down 18%. Cash flow was a little flat. We have cash flow from operations, 7 billion, and then also, which was up 6%, and free cash flow per share up 8% year over year. The bottom line was hit hard due to the rising medical cost, posting 3.4 billion, down 19% year over year. So again, just by looking at this chart, not financial advice, but it does look pretty undervalued. They're still growing revenue year over year. They just need to be able to fix some things. The perfect storm has hit this company this year. Lots of upper management turmoil, rising medical cost ratios, and a lot of drama. So let me know what you guys think about this company, because it does look like a screaming buy to me. not financial advice. Don't forget to like, guys, subscribe for more in-depth analysis, some explanations on some stocks, and we will see you on the next one. Thanks for watching. Peace.